What you're about to witness is an interview with the man who orange-pilled Michael Saylor into Bitcoin. It's an interview with my friend Eric. I'm not an interviewer. I don't plan on starting a podcast. So excuse me if you think my interview skills are awful. Give me some feedback in the comments. But this is his perspective as an institutional industry insider at the founding roots of MicroStrategy's thought processes, or Michael Saylor's thought processes to get into Bitcoin, and what his perspectives are, how to orange pill people, why people need to take this urgently, and most importantly, what he believes is the important date for when the retail era for Bitcoin ends and the institutional era for Bitcoin begins. And while you're watching it, I want you to go follow Eric, and I want you to subscribe to this channel because it's important. The faster you subscribe, the faster Bitcoin content gets pushed in front of people that need to hear it. Thank you very much. Let's get to this interview with my friend Eric. I don't know what's going to happen. So anyway,
whatever.
You want to just jump into it?
Yeah, whatever. Let's go for it. Why not?
All right, everyone. So this is my friend Eric, and Eric is the man that orange-pilled Michael Saylor. So welcome, Eric.
Thanks, man. Thanks for having me.
So
honored to be on your pod.
Listen, I don't know what's going to happen here. This is going to be a complete shit show. This is the first time I'm doing this, first time using this software, so who knows what's going to happen. But I think it's important. So hold on. You can't do that. You can't just flash your wrist and wear Nautilus and not show us. What are you wearing? What are you wearing? What's on the wrist?
I know you're a watch guy, so I wore it for you. It's a Patek 5711 with the blue face. I know you like watches, man.
I love watches. I've got an FP shot on, so
of course you do. Yeah, your collection is sick, dude.
I appreciate that. So,
which means you don't have enough Bitcoin. That's all that means.
I keep getting told this by people. It's like, guys, I've gotten to 1 Bitcoin and I'm happy with that. So,
you're good. You're good with that? Okay.
You know, so like I deserve my watches now. But so I know people are gonna want to follow you. So rather than waiting to the end to find out where people can follow you, where do they follow you as they fall in love with you through this podcast?
Sure. Yeah, on Twitter. I'm pretty much only on Twitter. It's Eric _ BIG Fund, which is an acronym for Bitcoin Investment Group. So Eric _ BIG Fund.
Okay, and I'll put a link to that in the description of this video as well for people to find it.
Thanks, man.
So, what's your origin story before we get to Michael Saylor and
Sure. Yeah, so I was a traditional finance guy, and I started out as a U.S. government bond trader. And then I went to business school, and after business school, I got into venture capital and private equity, and I was investing pretty exclusively in internet-related businesses. I'm not so young, and kind of the internet was just really kind of blowing up, that whole internet bubble, 2000-ish kind of thing. And so we got pretty good at figuring out what the internet was good for and what it wasn't good for. And what it was really good for was transmitting information. Pictures, stuff like that, whatever, emails, but it wasn't secure. People were really hesitant to do any e-commerce, transact online. They didn't want to put their credit cards online. You wouldn't put your credit card in an email kind of thing. Still probably shouldn't, obviously, for good reason. But so there was no way to really transmit value. Like, we weren't paying attention to that. We were just all kind of excited about this new internet stuff and how it was getting applied to help businesses. And then I went to a conference in Miami, of all places, in 2013. And it was a Bitcoin conference. And it was just a bunch of people walking around with T-shirts that kind of said, I can help you set up your wallet or something. And there wasn't much. I would guess there couldn't have been more than 100 people at this conference, I wouldn't think. And I was just kind of there to learn about what is this. And I was blown away by the fact that the internet seemed to be able to use to transmit value safely and securely. And even better than being able to transmit value was, like, party A did not need to know or trust party B, and they could exchange value. And so this was a big deal. I was pretty blown away by this. And I thought, okay, I'm going into this business. This is what I'm going to do. I'm going to do something with Bitcoin. This is the future. And I thought, okay, what business can I start? What can I do? And I was like, well, I could start a directory of companies that accept Bitcoin. And it would have been like not a lot of companies, right? And so I just couldn't come up with any business that I could do in the Bitcoin space. So I thought, well, maybe I'll just buy some Bitcoin, like, because there's a limited supply. And if this thing's going to work out, the price is going to have to go up. So I bought my first Bitcoin in December of 2013. And then it just started to be like, very yo-yo-y. And it was more like I bought it more not out of like a strong conviction, more out of just like, I want to participate in this in some way if it's like going to work.
Yeah.
And, it'd be up 100%, it would be down 75%, and then up 50. And it was just like the volatility was ridiculous. There was no reason at that time to be like, this is going to work. Like there just was no traction. There was nothing. There was no reason to think this is going to be a thing. Like on a risk adjusted basis at $35,000 right now, it is a way better investment than it was at $800 or $600 then. Like way better investment right now. So so that was kind of how I got into it, and just got really fascinated with it, and kind of came and went with it until it started to gain some traction, and then I got more involved.
What status did it have in the tax code at that point? Was it a capital gain product, or
That's a
did it
good
even
question.
have a status?
Yeah, it was treated. I guess I never like really looked into it. I just assumed that it was treated just like investing in a stock or something,
Okay.
so we treated it that way.
Yeah.
But yeah, I didn't even think to look into it at that level at that time. Like it never occurred to me at that stage, is this a commodity? Is this a security? Is this a digital gold? Like none of that. It was just kind of like almost just like a venture capital investment.
So what actually made you even decide to go into that event? You must have heard about it.
When you're in tech venture capital and internet related VC, you just kind of go to lots of different industry conferences that leverage the internet to see what people are doing. Whether it was like online direct marketing kind of stuff, lead generation, all these different, brand advertising, et cetera. And you kind of go year after year to these conferences in different industries, and you see like which companies are and which strategies and angles are bubbling to the top and where the industry is going, and you start to get a feel for different industries and how they're using technology. And then once you identify an area that you think is interesting, then you like kind of canvas for all the players in that specific area. You do an analysis of, all the best players. You make your little kind of strength and weaknesses kind of analysis, and then you try to invest in the companies that you think are the best if they're, willing to take some capital.
So did you invest in any of those early Bitcoin companies at that point?
Not early Bitcoin companies. No, I was, yeah, the firm that I was with at the time didn't have any interest in this piece. It was a very, that firm was very focused on, on business to business internet applications.
Yeah. Okay, and then so after that, what was your own process like for your own wealth? Were you straight lump summing in, or were you DCAing to get your own stack? Like, what was that process like?
Yeah, that process was volatile. uh, I just kind of like aped in a little bit for me at that time in my life in December of 2013. And then I just didn't have like super strong conviction that this was going to be a thing. And it was hard to ascribe any value, like, what's the difference between $800 per Bitcoin and $1,600 per Bitcoin and $400 per Bitcoin, in that world where nobody's fucking using it for anything. And it doesn't seem to have any application yet. It's just the promise of future application. So, it's like the swings were big, and I was like, I don't have a lot of conviction here. And so in 2014, first half of 2014, I sold all my Bitcoin at some nominal profit, not enough to matter. And then I kind of didn't buy any Bitcoin again, probably until I would have to check, but late 2015, maybe early 2016,
Wow.
things started to 2015, I guess. Yeah, 2015. Um, so I sold in Q1 2014, didn't buy again until 2015, when all of a sudden there started to be some traction, some signs that this thing that I had known a little bit about back in the day was like gaining some traction. And then I bought some more, and then I bought some more, and I've been buying ever since.
Wow.
And I still don't have as many Bitcoin as I had in 2013.
Wow.
Yeah.
Yeah, that's amazing. So when you're looking at Bitcoin now, it's obviously now trying to live out its store of value argument before it gets
Yes.
transaction argument. Why do you think Bitcoin is the best store of value compared to everything else you've ever done?
I that's my own. I think of Bitcoin. I mean, obviously, it's Bitcoin is very versatile and can be and do a lot of things. My personal view is I think of it as a digital gold and a store of value. I think it's just a much better gold. And I don't particularly care about any transaction piece of it, really. I care that I can safely store it and move it easily and access it from different geographies, et cetera. That's what that value proposition to me is more than enough from a value point of view to be bigger than gold. And bigger than gold right now implies like a 500,000, 600,000 per BTC
Yeah.
US dollar price.
Yeah.
So I think after that, it can kind of take on a life of its own and be significantly bigger. And when something is that big, entire networks and economies can spring up around it with L2s and things of that nature, Lightning Network, et cetera. But the point is, Bitcoin is software, and you can build on top of software. And people much smarter than me will come up with great applications, killer applications to leverage this, digital store of value. So my focus really is on the store of value piece because I think that's the single biggest problem that we're all faced with. You know, like we bust our ass to be successful in life or provide for our families or loved ones or whatever. And, you can't store that value for future generations or even later in your life if the value of the money that you're storing and earning is just getting crushed.
Yep. That's what I've been trying to tell people as well. It's to me, Bitcoin is a store of value first. And again, the argument of transactions. It's like to me, rich people need Bitcoin more than poor people, and poor people need Bitcoin adoption more than rich people. So, but you need to get one going first. You have to
Yeah.
get owning Bitcoin first before you can start getting the adoption to come in. So before we transition from that, because I'm assuming that everyone who's watching this knows you're a Bitcoin bull, right? Like, why would you be on this channel if you weren't a Bitcoin bull? So I don't want to spend too much time on that.
I
But
mean,
what?
I'm not, I would just interject that I'm not blindly a Bitcoin bull. Like, it's not like I've just decided I'm going to be a Bitcoin bull and I'm going to stay bullish through thick and thin. Like, this is my life. I'm committed to doing it. It's not that. Like, I've got to live in the real world. I've got to pay my bills in the real world. And I'm not dying on any hills,
Yeah.
right? I just think that this is legitimately the best solution to a lot of the world's problems. I can't envision how a competing solution may gain traction and be a better alternative. But if that were to happen through whatever confluence of events, like, you know, my loyalty is not to Bitcoin per se, right? It's to, a store of value.
It's the perfect store of value argument, right? And I've said
Yeah,
this as well. It's like I'm not loyal to Bitcoin. Bitcoin's just the best version of a store of value
yes.
exists. Okay, cool. Two questions to just finish this segment off then. So, number one, what do you think is the biggest misconception normal people say someone who's got $1 million net worth, right? What is
Yep.
the biggest misconception they have about Bitcoin that's preventing them, do you think, from allocating?
That's a good question. I think one of the things is a lot of people think that they don't understand um, that you can buy like a couple Satoshis, right? A lot of people think that you have to buy a whole Bitcoin, and they're like, yeah, I really don't want to commit $35,000 to this right now, or that's too much for me. It's like, well, you could buy a quarter of a Bitcoin. You could buy a half a Bitcoin. Like I don't, a lot of people just don't know that
Yeah.
because we talk about it in the price of a Bitcoin. So I think that's a big misconception. Uh, and then the media is guilty of a lot of causing a lot of other FUD and misconceptions, whether it's environmental issues that offend some people, or other things that they've been criminals use this, or this funded some hate group that they think it's. So I think those are a lot of the misconceptions. And then I think from the higher profile investor, not the $1 million individual, the multi-billion dollar hedge fund, I think their biggest concern is headline risk,
Hmm.
right? It's they don't they can make a lot of money aping into Bitcoin, right? Hedge fund managers are pretty fucking smart people, right? You don't get to manage $5 billion if you're a total idiot, and so they know that they could buy $1 billion worth of Bitcoin. If they're well respected hedge fund manager, they can then say, we believe strongly in Bitcoin. We bought $1 billion worth of Bitcoin, and they know that there's going to be a market reaction to that. They
Yeah.
know the fact that Bill Ackman, right, announces that he bought $2 billion worth of Bitcoin, that he thinks this is the new store of value. Other investors will see that, respect that, and the price of Bitcoin will go up as a result. And he will get some self-fulfilling prophecy. Like, that's not lost on the Bill Ackmans of the world. What they think is, fuck, man, I don't know how the US government's going to really come out on this. They still think there's some ambiguity. It's too thinly traded. It might be viewed as market manipulating by them. And there's the perception that there could be a negative headline risk,
Hmm.
which scares them away from doing it. I do think that's one of the things that's super important about the approval of an ETF is that would diminish that fear a lot. It's like saying, when the two largest asset managers in the world, BlackRock and Fidelity, go and sell this to their clients, who are the largest pension funds, endowment funds, and most respected and conservative pools of capital in the world, then it's like, okay, we can go do this now. So I think it kind of gives everybody, kind of that good housekeeping seal of approval that they can go dabble in this now.
Okay. And just to cycle back to what you said before, that you're not going to die on a hill, what would you need to see to divest of your Bitcoin holdings? That's a question that I don't think Bitcoiners are asked too often.
Yeah. Um, I mean, there's only two versions of divesting my Bitcoin holdings. One is being forced to for some reason, like an unhappy experience. I don't know, like I can't borrow against it. I need the money, something. So that's one version. And I've lived through some of those things in my life where I've had to divest Bitcoin for, certain reasons, pay taxes or some shit like that. But by choice, I'm not really divesting Bitcoin unless I have more confidence that there's a better store of value or better investment with a better ROI. And based on my perception of where I think Bitcoin is going, like nothing even comes close to that bar. Like
Yeah.
not even close.
Okay, excellent. So, just to give people a background, we met on Clubhouse in 2021, and
Is that where we met?
that's when we
Yeah.
met on Clubhouse in
Okay.
2021. And then we started talking and everything else. And then one day I was in Miami and we were going to meet up. And you called me and said, "Hey, I'm going to upgrade our dinner plans." I was like, "Okay." And then you said, "How about dinner at Sailor's house?"
Yeah.
And so it was me, you, Bitcoin Tina and Sailor having dinner at his house, and I and
Yeah.
I and I
That
that
was
was one
fun.
of the. It was a lot of fun, and again, I've said it to you before, but I want to thank you for inviting me to that. The question I have for you is, how did you and Sailor meet? What's the origin story of that?
Yeah, that was a fun dinner. It was a It was a very lively conversation. I love that. Neither you nor Bitcoin Tina are shy, unopinionated dinner guests, so that was a lot of fun. You get a lot of people in Sailor's orbit who just kind of like, you know, are happy to listen and not participate so much. So that was a lot of fun. But no, Sailor and I met. We actually met through my sister more than 25 years ago on vacation, and kind of became friends after that. And at different times in our lives, kind of different, different levels of friendship and hanging out. We both, for the first time, had homes in Miami, so we started spending more time together then.
Got it. So it was pretty natural then. It wasn't like business related or anything like that. It was
No,
just.
no business related, pure just friends.
So what was the first? Do you remember the first instance where you mentioned Bitcoin to him?
Oh, I mean, the first one specifically, no, but I mentioned it for years.
Okay.
And, he was at a time in his life where he was running a company that he started with a couple thousand employees, and he's competing against the likes of Microsoft and Salesforce.
Yep.
And, he's running the gauntlet every day, and he didn't give a shit about this. So it was like, he'll suffer through conversations that he doesn't want to have, but not often and not easily.
Yeah.
So it was like, yeah, this is not going to be a topic of conversation that we're going to discuss. Like, let's move on.
Right.
And that was the response for many years, and that changed during the pandemic. We spent a lot of time talking about technology and businesses and investments and stuff like that. It's kind of what interests us. And, we were hanging out at his house during the pandemic because, as you saw, the surroundings are pretty comfortable and more comfortable than my very acceptable surroundings. And so we'd hang out there and talk and try to make sense of what was happening in the world. And I don't think it was so easy to make sense of what was happening in the world because it didn't make sense. Like all the businesses are closed. This has got to be bad for the economy. And yet the stock market's going up. Like, what the fuck? This makes no sense. So we were trying to make sense of stuff. And I said something like, anytime there's a paradigm shift like this, there's opportunity, and we just have to find what that opportunity is. And then I started talking about Bitcoin because that's kind of what I did at that point, in my life, and I guess still do to some degree. And this time, when I started talking about it, instead of moving things to another topic very quickly, he said, "Tell me more about that." And I was like, "What? Okay, like here we go." And so we spent days, weeks, maybe talking about Bitcoin. And it's humbling when you talk to Michael, you realize how little you know about a topic. Excuse me, because his questions are like, it's like, you start to say something, he's like, yeah, I got that. Like,
His
next,
brain,
next.
I couldn't believe that at dinner. Like his brain works so fast. It's
Yeah.
it's it's remarkable to see. I thought my brain worked fast until I stepped into that dinner.
Yeah. So that, it's like, I remember he started asking about mining, and like, I conceptually understood mining, but, I technologically, no, like, so we quickly, I don't know, 2 weeks or something like that of talking every day, got to a point where he's like, okay, well, if I wanted to learn more about this, how do I do it? And I was like, well, this is really all taking place on Twitter. And he's like, really? And I was like, yeah. He's like, well, who do I follow? What do I do? And so he had a Twitter account, like 30,000 followers or something like that at the time, as CEO of a publicly traded company. And I gave him a bunch of people to follow, and gave him some books, to read. And we continued to talk about it after that. And then he's like, one day he's like, well, if I wanted to buy some Bitcoin, how would I go about doing that? And so I called my, pretty high level contacts that's in serious places and put him in touch with them and tried to get him fast tracked to, getting approved, which still took months. And, at the time, Bitcoin was like $10,000 per Bitcoin, pretty much exactly. And then one day I was like, I was in my car, I was pulling into a parking spot at a restaurant to go meet some other friends for dinner. And the phone rings and I see like on my thing, it says like Michael Saylor. And usually he'll text, like calling's like fairly unusual. So I was like, oh shit. So I park, I answer and I'm like, what's up? And he's like, well, I bought Bitcoin. And I was like, okay, cool. And he goes, yeah, 10,000. I was like, you bought one Bitcoin, dude? And he's like, no, I bought 10,000 Bitcoin. And I was like, well, yeah. So his first entry was $100 million entry.
That was
and so like
personal entry, right? Not MicroStrategy.
Yeah, personal.
Wow.
And so I went from thinking, great, in like an instant, I went from thinking, great, I got my buddy into Bitcoin to, oh shit, he just put a lot of capital at risk. And anyone who's been in Bitcoin up until this point knows that you don't just get no one gets a smooth ride.
Right.
So I was like, I was excited, but definitely like a little scared and conflicted. So,
out of curiosity, what percentage of his net worth did you think he should have allocated versus just going on with the full 100 million in the first hit?
Yeah, I mean, Michael is a different kind of person. So he will, okay, I orange pilled him, but people orange pill themselves as well. And his level of research, his level of conviction got to a point where he was sure.
Yeah.
And, there it reminds me of a book, right? There's oh God, what was the name of that book? I think it was called Relentless, maybe.
You mean Tim Grover's book?
Yeah, Grover's book.
That is one of my top three books. Yeah.
Yeah, I love it. I recommend that book to everybody all the time. And all people who are like us freak out and love it. And they're like, yes, someone understands me, right? Yep. And so, like for the audience viewing, they won't get it, but he breaks down people into kind of three categories of like cleaners and closers, right? And it's just a matter of like the difference between good, great, and the best ever. Yep. And what you see when you look at it, and it focuses on athletes, in particular basketball players. And when you look at the difference of how a Michael Jordan or a Kobe Bryant approach their workouts and work ethic versus the rest of the players in the NBA, what you realize is they're just built a little different. And like all is not even enough. It's like when they asked Michael Jordan, after his like fifth championship, which was his, which one meant the most to him, which is your favorite? And his response was the next one, like that's very much Michael's personality. He's very much a closer like that, right? And so for him, in that context, picking up 20 Bitcoin was never, there's no point doing it.
Yeah.
Like it would be idiotic to like dip a toe. Like do the fucking work and decide if this is the thing. And if it's the thing, get as much of it as you can.
Yep.
And if it's not the thing, don't fucking get any of it. Yep. Like the half measures are always wrong. Right?
As it's kind of you only need a diversified portfolio if you don't know what the fuck you're doing.
Right. And so, and he's not going to do anything unless he's pretty sure what he's doing. Right. So it's in that context that I think, he went big.
It got it for him. So now you obviously, when did you set up the Bitcoin Investment Group to help people, sort of, I'm assuming based on everything I've learned about you is that you're actually not only helping people bridge the gap between, okay, I have cash and I want to convert it to Bitcoin, but you
Yeah,
also help people through the knowledge gap too, so that they can go
yeah,
through that journey to feeling safe enough to allocate into the
it,
into your fund.
exactly right. So for I get the not your keys, not your coin, and take possession of your Bitcoin and all that. But when you're dealing with um, high net worth individuals or super high net worth individuals or family offices, they are accustomed to investing in a particular way. They don't like to self custody their stuff. The it's not a lot of billionaires, although some do, have like bars of gold in their home safe.
Yeah,
They
it's
may
also
have
an
physical
insurance problem.
gold.
It's just an insurance
Right.
problem as well.
Yeah, there's a lot of issues with it, but most of it is like I want to take US dollars, I want to send it somewhere where I'm sure it's going to be safe, and at the end of the year, I want to receive a K1 that I send to my accountant, with all my other investments, and he handles my taxes for me, etc. And they want to be able to get in and out, and they don't want to pay a lot of fee. And so what I set up was through Fidelity Digital Assets, which I think is the safest custodian in the world, probably. We have a Bitcoin fund where investors can invest in US dollars. We take all the US dollars they give us and we go buy Bitcoin at Fidelity Digital Assets. And the Bitcoin is stored in Fidelity's cold storage. And then when they leave, we do something very unique. I think we're the only fund that I've ever heard of that will send you Bitcoin instead of dollars if you want to leave. Like if you invested $1 million in Bitcoin now and you decide a year from now that you want to leave the fund and you're ready to self custody, we'll send you Bitcoin instead
Wow.
of selling the Bitcoin and sending you dollars. Because that was an important structural thing because I thought that everybody needed to be able to get their hands on their Bitcoin
Of course.
if they ever wanted to or needed it. So that's why it's set up that way. And also, like, I charge really little. I
I
charge
was shocked at that
1%.
when you, yeah, I was shocked at this
Yeah,
part when you told me because
yeah,
normally for those people that don't know how a fund works is you're going to charge, the standard 2 and 20, right? So it's going to be 2% on the amount of capital AUM that you have and then
yeah.
20% of whatever the performance is. But what's your fees?
I charge 1% um, annual management fee, which we take pro rata monthly, and that's it. And out of that 1% that I take, I personally eat all the expenses of the fund. So I pay for the accounting, I pay for the custody at Fidelity, I pay for the legal, I pay for the audits and everything. I pay for the fund is audited. I pay for all of the fees out of that 1%. So for a while, it was a labor of love and it was costing me money.
Yeah.
And then the other thing that people really get in addition to that, and also I pay accountants a fortune to, even though the Bitcoin is commingled in a fund, we maintain separately managed accounting, not accounts, for individual investors. So
Okay.
one person's capital movements don't impact another investor from a tax point of view. And the other thing is like our accounting is in Bitcoin. So if you send in 350 grand and we were able to buy 10 Bitcoin with the money or something, and your account will show 10 Bitcoin every
Wow.
month when you get your statement. It doesn't have the dollar price. It's just in Bitcoin.
Wow.
So that's pretty unique too. Um, yeah.
And I keep getting blown away. So there's no performance fee, right? Like so if
There's no
Bitcoin,
performance fee. I do charge my 1% fee in Bitcoin though.
yeah, yeah. I mean,
So if you've got 100 Bitcoin with me at the beginning of the year, at the end of the year you're going to have 99.
got it. Okay. But it's still amazing that you've only got a 1% fee for.
Yeah, I mean, it wasn't a difficult thing to anticipate that there would be other vehicles that would make buying Bitcoin very inexpensive,
Yeah,
right? So,
yeah,
like, there'd be ETFs or GBTC type stuff, or open an account at Coinbase, which, by the way, like lots of high net worth individuals and family offices don't want an account at Coinbase. That's not a comforting thing to them. It's like, this is a new name. I don't know this name.
Yep.
And I see that they did an IPO, but I see that they're in the crosshairs and fighting with the SEC, and the valuation of their company seems to fluctuate too much. This is not my Goldman Sachs. This is not my Fidelity. Not comfortable having millions of dollars in that there. So we are a nice solution for those folks.
Got it. And what's the minimum investment into the fund? Because I'm assuming you're not going to deal with someone who's got $5,000.
No, can't do $5,000 just because. And the only reason there's a minimum is because I get hit with, thousands of dollars of expense per new investor.
Yep.
So, we've got a new investor costs me roughly $3,000 a year. So for that reason, I say 300,000 minimum, because at 1%, it's like $3,000. And it's like, I got to at least try to break even in the short term.
Of course. Okay. So 300,000 minimum. And what type of clients do you normally get? Are they in like family offices, or is it high net worth individuals as well? Like what?
Both. Yeah, we get. From an AUM point of view, the largest our family, the majority of our AUM is from family offices, and then we also have high net worth and kind of ultra high net worth individuals, and we also have kind of accredited investor types. One guy is a lawyer who, has I think 9 Bitcoin. Right. He came in, when things were like in the 50s, but, is an attorney who wanted to buy Bitcoin, and this felt safer to him. So, it really does run the gamut. And because our fund can accept accredited investors, so the threshold is a little lower. They don't have to be qualified purchasers, which means you have a net worth of 5 million or more, et cetera. So it's open to a lot of people. But yeah. And the other thing they get is just kind of they get someone who can kind of help them understand what's going on, because what gives a lot of investors in Bitcoin angst is they're not the kind of people who spend all day on Twitter. They don't know everything that's happening in Bitcoin. What they know is they turned on CNBC when they came home and they saw Bitcoin was up 10%, and they want to know why. Yeah. So it's someone they shoot me a text or an email, or they say, hey, what's going on with Bitcoin? And I say, oh, well, the SEC lost their case against Grayscale and, Bitcoin. Oh, okay. So it's someone to like reach out to like tell them what's going on.
Yeah, no, that works. That works well. I feel like that's my job as well on YouTube. It's just helping people understand like why things are moving in the right way. Because there's a lot of Bitcoiners. I like to lovingly and affectionately call them the $1,000 net worthers that have their opinions about how the market works. But really, there's underlying things going on that might move a market that most people don't know, and that's what terrifies someone like my parents, right? Who put a bunch of their real estate money into Bitcoin, and now watch the price move down 15% or whatever over a week. It's like, what the hell's going on here? So, no, that's really great. So, what?
By the way, those misconceptions are not limited to the $1,000 folks. I have no shortage of ultra high net worth people who are just like have crazy ideas about what's going on. I mean, people thinking that BlackRock was intentionally manipulating the price of Bitcoin down or up for some it's just, and they really think, well, BlackRock's keeping the price of Bitcoin down, for the launch of their they don't give a fuck. They don't give a fuck at all. Their job is to make 75 basis points risk-free. They don't care what the price of Bitcoin is. When the money comes into Bitcoin, they make their 75 basis points either way. They're not going to risk the world's largest asset management franchise over illegality on a proprietary Bitcoin trade. If they want to take a position in Bitcoin, they can take a position in Bitcoin as a firm. They don't need to do any of that. And so you hear all these different theories about the Federal Reserve doing this to keep the price. It just amazes me to no end, and it's like sometimes, I I get to be privy to some of these conversations with folks who really are in the know at some of these higher level things, and it's just almost always what you would think. It's almost always the straightforward, pragmatic, honest thing.
Yeah, we want to get $5 billion into this, watch it go up to 50, and collect up 75 basis points or whatever we're
You
getting.
got it.
It's very
That's
simple.
it. Yeah.
Yeah. So tell me something from an institution perspective, right? In 2021, there was a big cry about corporations getting into Bitcoin. And I've said this openly. I think Michael Saylor and MicroStrategy are one and done. I don't think that ever happens again because if I'm Apple, for example, and I say I'm going to put 90% of my treasury into Bitcoin, the signal I'm sending to
Yeah.
my investors is I don't have any new ideas to invest in. So, and as if you have an ETF, I can just click sell on the Apple stock and buy on the ETF, and I remove 4 layers of risk with Apple just holding the Bitcoin anyway. So, what do you think about that? Do you think capital from an institutional perspective comes from not from the corporate treasuries, more from the assets under management of these funds, or do you think corporate treasuries are still a big influence coming through soon?
I think it's going to be very company specific. If the company's prospects are great and they have a good use of funds to defend, grow, build their business, win in their respective industry, then I think they have an obligation to use that capital to stay competitive and win in whatever space they're competing. If they're a company that just generates a lot of cash flow, and their thought is like, well, we could return this to shareholders, or we could buy back stock, or we could do this, or if we want to keep the cash for whatever reason, you don't want to keep the cash in cash, right? So for those guys, I think buying Bitcoin is logical, and there'll be plenty of that. And it's not limited to companies. I think municipalities are in the same situation. Like all municipalities are pretty fucked as far as I can tell from a insolvency point of view. And I don't think it'll be too long before we see some city, some state, some government issue a crap ton of debt in their fiat currency and use the proceeds to buy Bitcoin. So I think there are an infinite number of buyers for Bitcoin, whether it's personal balance sheet, corporate balance sheet, or municipal or government balance sheet.
Can you sense that the type of buyer that's buying Bitcoin is changing between last cycle and this cycle?
Yes. Yeah. I mean, last cycle, my conversations generally were my son or daughter has been talking about this shit nonstop. Now I see it in the Wall Street Journal or on TV. So, they're prodding me to have a conversation about this. It looks like it's becoming more legitimate. What can you tell me? Educate me. I might dip a toe. I might invest in this. Now the conversations are, everybody knows what we are. Everybody knows that people like Larry Fink, right, CEO of BlackRock, have been on TV saying this is a legitimate global store of value, right? So you can't imagine how much that matters. You and I screaming at the top of our lungs, this is a legitimate store of value, does not mean shit to the multi-billionaire matriarch or patriarch of a family office who has $500 million, with BlackRock, and then they see their CEO say, Bitcoin is a legitimate global store of value, and they go, what?
Yeah.
Okay. Yeah. So, yes, the conversations are different. The type of person, the type of investor is changing. Although, surprising to me, they're not throwing capital at it. There are exceptions. Some really are. I've had a really good inflow of capital since July. But by and large, they're still on the sidelines, which is amazing to me. I think at this point, they're kind of saying, yeah, we'll wait for the ETF. We'll see how this goes or whatever, which is amazing to me because they're missing the supply-demand and balance piece of it, which I think is the biggest deal.
Yeah. Okay. And finally, I know we got to stop recording.
Yeah, I got it.
What is your message for people who are, at the bottom trying to get to one Bitcoin? How urgent do you think that is at this point?
I think that I'll stop short of giving financial advice, but what I will say, and I have been saying for some time, is the day the ETF gets approved, that is the day that the retail era of Bitcoin comes to an end. Yep. And the institutional era begins. And while I think Bitcoin will continue to go up in US dollar price due to adoption and due to the, my perception that the US dollar will continue to devalue over time, I do think that there is a brief opportunity here for outsized returns to get in front of that tidal wave of Wall Street ETF money. And I do think that if one was deciding between investing now or in the ETF, when the ETF comes, yeah, maybe it's a little de-risked once the ETF gets approved. But in my opinion, the risk reward for getting in before it gets approved is like extremely material.
Perfect. Well, listen, my friend, thank you so much. I know you got to go. I appreciate your time.
Always good to see you, man.
Yeah,
thanks again for having me on.
No worries. You're going to be my institutional insider. So what I'll do is, obviously, if people want to get a hold of you, they can go on Twitter, twitter.com/Eric_BIGFUND. Is that right?
Yes, sir.
All right, perfect. I'll put the link in the description, and thanks for joining me.
Thank you, brother. Always good to see you.
So I hope you can agree with me. That's a fascinating conversation, a fascinating perspective on the journey of a multi-billionaire and a huge corporation and what they need to go through in order to start the process of getting into Bitcoin and why it takes time and work and effort to do this. So I hope you enjoy that interview with Eric. Please follow Eric. He does great work in the institutional space and in the management space as well. And of course, is a huge proponent of Bitcoin. But as you can see, the institutional investors in Bitcoin are completely rational. And the reason why they're coming to Bitcoin is because it's a rational decision to come to Bitcoin, which makes it even more dangerous for you and I, because we need to secure our Bitcoin before they come into the game and try acquiring. Like as you heard, Michael Saylor's first Bitcoin purchase was $100 million, right? This is not a small amount of money that's coming into the market as soon as the penny drops. So you need to get to one Bitcoin as quick as possible, secure your position for generations to come, because the institutional money is coming. And most importantly, please subscribe, because the faster you subscribe, the faster the message gets out to other people that need to hear the message of Bitcoin. And despite Eric, despite Michael Saylor, despite British HODL, despite all of this, there are still only 3 rules to Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.